Right now, the international oil market is buzzing with excitement. Originally slated for this weekend, an extended OPEC Plus conference has been postponed to next Thursday. Just days ago, there was an expectation that Saudi Arabia would expand its production cut, 1 million barrels per day, to boost oil prices. However, the narrative has taken a turn this week. Speculation is rife about massive discord within OPEC. Saudi Arabia seems upset that many other cartel members are reluctant to cut their production levels. Essentially, the Saudis appear to be shouldering the burden of potentially higher oil prices all on their own. We're currently witnessing a sudden dip in oil prices, and the suspense is building. Once again, the oil market proves to be incredibly thrilling. The oil price is taking an unexpected downturn, with WTI crude losing over $3 in the last 3 hours, dropping to as low as $74.74. In the TradingView chart, you can trace the price movement since October 27. What's happening? The upcoming weekend marks the OPEC and partner countries meeting, collectively known as OPEC+. Initial expectations suggested that Saudi Arabia might further cut its production to significantly boost oil prices. However, there are new developments. Oil price decline turbulent talks says Saudis dispute production cuts. The OPEC+ meeting scheduled for this weekend seems to be in jeopardy as Saudi Arabia expresses dissatisfaction with other members regarding their oil production levels. Early today, there were indications that the OPEC+ conference could be indefinitely postponed, according to delegates cited by Bloomberg. Saudi Arabia, which has implemented an additional production cut of 1 million barrels per day since July, is engaged in challenging discussions with other members about their production levels, said delegates requesting anonymity as the talks are private. The OPEC and its allies are facing an increasingly negative outlook for oil prices. Since its peak in September, prices have dropped by 15%, defying expectations that production cuts would quickly tighten markets. The prospects for next year are even dimmer, with an excess predicted for the first half of the year if the cartel maintains its current policy. Pressure on OPEC+ members. Pierre Andurand, the renowned oil trader and founder of Andurand Capital Management, stated in a recent interview with Bloomberg TV that Saudi Arabia probably desires higher prices and will push other OPEC+ members to join recent production cuts. Riyadh might reverse its unilateral cut of 1 million barrels per day, referred to by its energy minister as a quote sucker, if other OPEC members do not contribute further to supply reductions. According to Andurand, intrigue within OPEC, the current line of thinking goes like this. Saudi Arabia might be threatening its OPEC colleagues by allowing its own production cuts to expire. This move would increase the global oil supply, potentially causing a drastic slump in oil prices. The fear of this scenario was evident this week as trading volumes for oil put options hit record highs. The possible scenario: if oil prices plummet significantly, it might persuade other cartel members more effectively to agree on production cuts, as all oil-producing nations would then seek substantially higher oil prices. And a country like Saudi Arabia seems to desire a noticeable spike in oil prices. Underestimating this desire would be unwise, hence significant maneuvers might be in play, potentially influencing production discipline before next Thursday. Saudi Arabia takes $11 billion loan to finance deficit. Saudi Arabia has secured $11 billion in debt through a consortium loan. This marks the largest loan taken by a government globally this year to finance its budget deficit amid weaker oil revenues, as reported by Bloomberg. The 10-year loan was funded by at least 15 banks, including the Industrial and Commercial Bank of China, Citigroup, First Abu Dhabi Bank, PJSC, and HSBC Holdings, according to sources familiar with the matter. The loan carries a margin of 100 basis points above the secured overnight financing rate, SOFR. As per these sources, a spokesperson for the Saudi Finance Ministry did not immediately respond to requests for comment. Saudi Arabia has revised its financial forecast and anticipates a deficit from at least 2023 to 2026, according to a midterm budget projection released in October. The deficit arises from oil prices performing weaker than expected, reduced production starting from May, and escalating state expenditures, as the kingdom channels hundreds of billions of dollars into a diversification campaign named Vision 2030, spearheaded by Crown Prince Mohammed bin Salman. While a portion of this is funded by oil revenues, the government must also attract foreign investments and take out loans. By the end of the third quarter, the government's debt stood at 994 billion riyals, $265 billion. Authorities are keen on maintaining a similar mix of external and domestic financing, and are also exploring their options in the syndicated loan market to finance specific projects. Economists at Goldman Sachs stated in a note this week, several key institutions investing in Vision 2030 projects, including the Public Investment Fund and its subsidiaries developing the new Titanium, have already secured loans worth billions of dollars. According to Bloomberg, this recent financing for Saudi Arabia marks the third consecutive year in which the kingdom has obtained the largest consortium loan for a sovereign nation.